First and foremost, we'll be looking at transaction data across key discretionary categories. Be it apparel or restaurants, and if they continue to show slowing growth and that growth continues to decelerate meaningfully across different demographic groups and across different industries, that could be an indication that this is really, really, a broad-based, real pullback.
Today on Customer Land, Michael Gunther, who's VP and Head of Insights at Consumer Edge. And I'm just going to say, to frame this conversation, it has been a long time in coming. We've got, was just reviewing a monstrosity of a string of emails that we've created trying to schedule this. So we finally made it here. And Michael, thanks for joining me.
Really happy to join. So I've been at Consumer Edge for 9.5 years now. So we basically provide data and insights to investors on the public and private side, and also on the retailer and merchant side of the house, essentially giving them insight into competitive intelligence for their space. We provide them with insights into their own customers, be it demographic or behavior based, and we also provide visibility into potential partnership opportunities. There's a whole host of things you could do with our data, and our team really helps make that data come to life.
Surprises me then that this is our first real connection. We should have been talking years ago.
Yeah, absolutely.
So started something good here. So to set some context that we're not going to use anymore, we had originally planned on going through a report that Michael and his team put together called the State of the Global Consumer Report, which was created in Q4 of last year, which is packed with insights. And I would absolutely recommend going through it just so you can see the kinds of things that are in it. But as Michael and I were just saying before we hit the record button, there's been some real sea change in the past 5 or 6 weeks here, that, for all kinds of reasons, mostly political, but the landscape has shifted just radically here. So with that as a backdrop, there's a lot going on here.
Yeah, there is. And we recently actually were quoted in a couple of publications just going over trends we're seeing in our US transaction data across industries of all types, especially in the last 4 or 5 weeks. We've seen spend patterns weaken across the board. And, what might be a little troubling, and this, started happening toward the end of 24, but has certainly continued into this year, is the winners are types of industries that are associated with a pullback, thrift, things like that. So, in Q4 of last year and continuing into this year, fast fashion did well. Resale has been on the rise, and that's accounting for a much bigger portion of overall apparel, accessories, and footwear spend. And the ability to find really nice bright spots outside of that, I think, has dwindled. And you're even seeing in some of those areas, even though they're relative winners, you've started to see spend slow down a little bit, even in off-price retail. So it does seem like something might be happening across the consumer landscape. It's still early days. And we're watching consumer spending with our credit card data. We're watching pricing in our newly launched receipt consumer purchase data product called Basket View. And we're watching engagement online with our global web traffic and transaction data product called Click. So we're watching this in a lot of different areas. It's really early, but you've seen companies' commentary kind of confirm what we're seeing in the data. Even in just the last week, you had a whole host of companies across industries really taking sort of a cautious note on the year.
Yeah, it's been an interesting thing just from a narrative standpoint. I think with a little bit of foresight, you could have seen some of this stuff in Q4 happening. But listen to the corporate, I just say narrative, and I wish there was some sort of narrative index out there. Maybe we can work on that.
I've seen some things before where there's analysis of conference call transcripts actually that look at
Oh,
the instance of a particular word. I'm sure that's happening now with the word tariff. I mean, you could see it. I see like these summaries of conference calls, and everyone's mentioning tariffs either by name or sort of alluding to
right.
geopolitical uncertainty. The
Yeah.
interesting thing is, whether or not, it'll be sort of used as a crutch if things are not going well. But it's sort of hard to avoid. It's in the headlines
Yeah.
outside of these conference calls, so everyone knows this is happening. It's real, and it's creating, I think, a lot of uncertainty both on the consumer level. Should I make an investment now? Should I make this big purchase? And also on the corporate level, about what their strategy should be, what their inventory level should look like, how they're going to adjust to rising prices. And obviously, some of the bigger players like Walmart are going to try to do what they can to use their heft to negotiate pricing. I
Sure.
saw that headline from them, but it's certainly harder for smaller businesses who don't have that sort of negotiating power.
So let's go back to the end of last year, and you saw indicators that were kind of pointing maybe lightly in this general direction. Um, Election happened, or rather, the transition happens, and certain things start to take place that start to maybe cement an economic view from this country. And I had it started off casually with me just having conversations with colleagues once in a while on this podcast, um, where people going, yeah, I think we might see a pullback. It could happen. But the overall corporate narrative that I was aware of was overall fairly positive. And yet I have to say that, it was more of a gut feel. I was thinking to myself, I need to read between those lines because the public speak seemed to tell a slightly different story than the kind of spend reality on a corporate level. And
Yeah.
and I guess that's now become real. Now it's like, okay, now it's out in the open. I can talk about it. Um, my take, but that kind of means that companies have a bit more free reign to really do something about it, whereas I think it was so cautious early on. Is that your take too?
Hmm. No, I mean that's a tough question. Look, I mean there was quite a bit of optimism, I think, around certain bright spots that you could see. Like, for example, ahead of, I think, caution throughout the year, way ahead of the election, Black Friday, Cyber Monday turned out, I think, better than expected. And we were able to find, lots of bright spots. We saw encouraging signs in personalization, in luxury jewelry, indicating maybe people were just saving up for something special as opposed to buying throughout the year. And then, the sort of staples of online spending, be it Amazon, eBay, and then some of the new merchants, they performed well also. Discount stores did well too. So that started maybe to introduce some nervousness, that those names were attracting spend from people that wanted to pull back. And there's been quite a bit of commentary on, high income consumers trading down. But look, I mean, if the consumer is pulling back a lot and there's fewer pockets of strength, it's going to make it harder for companies to really move the needle, but it's going to require them to stand out with whatever they're doing. And that's sort of what we were thinking we were seeing with personalization type names doing well. That's a way to give a gift that doesn't look like anyone else's, obviously. But if consumers are really pulling back, it's probably going to be more about pricing and deferral of spend than anything else.
Oh, that opens up another entire portfolio of questions I've got over here, just waiting for you to walk over there.
Love
Uh,
it.
that has to do with how consumers respond and how companies who count on brand loyalty, or whatever your fix, quote unquote, is, if it's heavy discounting, or whatever your hooks are. Um, in the past, consumer pullbacks have meant a lot of those kind of softer tools were were found to be fairly ineffective, because it turned out to be about value, which for a lot of people just means price.
Yeah. I think that can probably be combined with loyalty to an extent, because if I'm a consumer and I'm sort of comfortable, as long as it's reasonably priced with a particular brand that maybe has basics, maybe I'm less likely to take a chance and buy some and spend something on something new that I don't know about. So I think maybe that familiarity might be a lever they can pull in those areas. Um, Aside from that, I mean, one of the things we've really looked at is how spending, especially in the last year leading up to this weakness, has looked across different demographic groups. So, to the extent a company can pivot how it positions its products to groups that are, let's call it, less weak than others,
Mm-hmm.
highest income groups, actually the youngest groups, have been stronger on a relative basis in apparel, accessories, footwear, luxury. Um, so, if they can kind of pivot and focus on those areas and market more to them, those might be ways to, sustain a customer base, or even, gain new customers, at the expense of others. Same thing, by the way, goes for older consumers. We've obviously seen that group make up a much bigger percentage of the total. They have a lot
Right.
of spending power. We didn't see them perform particularly well in this space, but if you want groups of people that might be more immune to a pullback like that, these are the sorts of groups that companies can look to, depending on how flexible their strategies are.
Right. It would be it'd be really interesting, and I don't know if you're prepared to have this part of the conversation, to look at potential parallels between consumer habits during the pandemic versus what's happening now. I mean, they're pullbacks, but entirely different psychologies behind them. I mean,
Yeah.
fear at the underlying, at the most kind of lowest common denominator, but they're fear based on different criteria and drivers. Do you see, if you can think back that far, because it now feels like, a lifetime ago, do you see parallels? Are there things we can draw from that? You can optimize for NPS, and that's good. You can optimize for CSAT, also good. You can optimize for loyalty, and that's good too. But here's the thing, if you're not optimizing for total customer value, for total customer profitability, then you're just optimizing for output, not the bottom line. Here's the truth. If your strategy isn't building better customers, more frequent, more loyal, more deeply bonded, then it's not a strategy, it's a performance. At Customerland Studio, we help brands find the value, find the opportunities, the force multipliers hiding inside the customer relationship. And then we help them optimize for scale, for yield, for profit across the entire relationship. Because the other thing we've learned, the only strategy that actually matters is the one that makes your customers more profitable. Customerland Studio, to make better customers. Go to customerland.net and click on the studio.
I mean, to your point, it's a completely different piece of psychology, I think, compared to then. What's maybe a little less encouraging now is that post-pandemic, there was, a ton of pent-up demand for the sorts of things that you couldn't do during the pandemic. Looking at industry-wide spend, it looks like, things like travel, things like, entertainment, um, those surges in spend, that recovery seems to have sort of played out. So that piece isn't supporting things anymore. Um, there's a certain degree of fear, but I suppose it's a little bit different. Now it's probably just much more about uncertainty.
Right.
So if pent-up demand is done and savings are somewhat, spent, it's about just waiting to see what happens, especially as it pertains to pricing. I think if there's one thing we all learned, from the recent election result and all of the commentary around it. It's that, prices at the store matter so much more than a lot of other economic indicators. So if there is a fear that prices are going to go up, uh, which we're going to be watching really closely in the coming days to see if it manifests itself at the grocery store, that will likely immediately make people pull back in other areas.
Right.
So, the more talk there is about that, the more cautious people will be.
Right. The power of the narrative. Um, Back to the pandemic idea. There was all kinds of interesting kind of psychological wrinkles that kind of surfaced in some of the research we did and the research we saw. One of them was that almost immediately spending on vice type habits spiked. Alcohol sales had a nice run. I don't believe you can track this because you track spend, but apparently we were having a lot more sex. Um, that's just what the data said,
We do not have data on that.
Nor will I ask about it. But let's just talk alcohol for a minute here because it seemed to have been, and I can't remember whether it was leading, lagging, or just kind of a running effect of the fear of the pandemic. But are you seeing anything in that sector that would indicate that, like, hey, this could get bad, I'm going to start drinking again? Also not advocating that.
That's a good question. I'm going to pull up some data here just to see what we're seeing in this area. Yeah, and it's interesting that psychology around that was fascinating because there was nothing else to do, and you think to yourself, what's the difference if the whole world is going to crap? Like, I might as well
Yeah.
have a good time. I knew we had a problem with. So our daughter, by the way, was born basically when the pandemic started, like right then. I knew there was a problem. Maybe it was like a year into it where maybe it wasn't a year, something like that, where she had made a comment about saying cheers. And I'm like, wow, we must be having wine at every single meal if she's noticing this now.
That's
So
one of her
that's
first words. Yeah, that's
yeah,
big.
exactly. She knows that I like red wine, for example. So um, so that's always pretty
Yeah,
fun.
that's an indicator of all kinds of different things.
Yeah. No, so obviously, look, I'm looking, for example, at alcohol sales in our data right now, and as you noted, there was a really big increase. Sales have been kind of stable the last couple of quarters. We're not seeing any indication of renewed interest in that, right? It's not as if someone's going to stay home because of this. It's not the same sort of fear.
You're right. It is.
And alcohol is expensive. So we'll obviously be looking to see if there's any sort of trade down between, from more expensive categories to less expensive categories. And that would sort of be analogous to how people are trading down, even, high income, trading down to Walmart, off price, things like that. Maybe it's the same sort of thing here where people still want to have a drink, unwind, have a good time with their family, but they're, buying something a little less expensive.
Right. That would be really interesting. As a red wine drinker myself, I'm interested in that
Yeah.
trend, just to figure out where I should be going after this. Um, One of the biggest indicators to me that I was aware of that this economic uncertainty might actually be real. It's not just kind of a amorphous fear in the air. Is the recent news on the Dow that really took a hit, and you talk to people who are kind of, I'm just saying, lay people who aren't really into that, and they're like, yeah, it's just a number. What does it really mean? And I think I forget who I heard explain this, but the Dow and other indices are compilations of millions of transactions. So it's a really great way of understanding consumer sentiment or investor sentiment anyway, which is a close parallel.
Yeah, I mean, it's interesting. I come from a more traditional finance background before I entered the alternative data world. Main Street definitely pays the most attention to the Dow. It is just, it is 30 companies that are, very representative, but, the S&P 500 is typically, I think, a much broader view of what's happening in the stock market. But yeah, when the Dow, S&P, maybe less so the NASDAQ, because, tech doesn't hit in the same way because it doesn't speak to everyday essentials. When those are making headlines outside of business news, that does get people worried. But again, I do think the pricing piece of it, whether or not someone's laid off, tends to matter a whole lot more. Because then they're feeling it personally rather than
Yeah.
just reading headlines. And of course, there's always going to be, political polarization where, one side's going to interpret data in one way and the other in
Right.
the other way. But when it comes to what's happening with your own experience at home, there's, much less of a gray area there. So
Yeah.
that's why those data points are going to be incredibly important for us to watch.
So over the next, say, 2 to 3 weeks, 4 weeks, what are the key indicators you're going to be looking at?
Yeah, I mean, first and foremost, we'll be looking at transaction data across key discretionary categories. Be it apparel or restaurants, and if they continue to show slowing growth and that growth continues to decelerate meaningfully across different demographic groups and across different industries, that could be an indication that this is really, really, a broad-based, real pullback. And then secondarily, using our basket view consumer purchase data product, we'll be watching products at the grocery store, at convenience stores to see what pricing is doing. We're going to be hyper focused, I think, on some of the areas that are more impacted by tariffs. Um, some are more impacted by others, just in terms of where the tariffs are hitting.
Hmm.
But categories that really matter in terms of the total grocery bill. So if pricing really does start to tick up in those, that is definitely going to be more cause for concern. And we'll know if we're seeing it in the data, that means people will be feeling it in their pocketbook.
I think it was somebody from the uh, Republican. I'm just say operative because I just don't remember what this person's title was, but uh, was saying this morning that as they were watching what's happening in the stock market, look, it's it's a 1 day down, and anybody who's followed the market for any period of time knows that happens, and it happens, you know, typically right around this time of year a couple times. Um, but that what he said, which I thought was really interesting, he said, like, look, if this looks the same way in 3 weeks, we may actually have a problem. Then you've got something that looks like, that's not just a 1 day dip or a week long dip. You've got something that feels a little bit more sustained and could feel like trouble.
Right. And those sorts of sustained declines are much more likely to make it into mainstream newspapers, the
Right.
things that, people that are not in finance are watching closely. Um, so, yeah, we'll have to see how it turns out. I mean, certainly there's a ton of headline risk, there's a ton of volatility. The volatility within a given day is going to certainly impact, hedge fund managers and other folks in finance. But, to an ordinary person outside of those areas, those sorts of intraday moves don't matter. But to your point, if you keep seeing, uh, you know, large declines in the Dow and S&P over a multi-week period, people will start to wonder: is this entire strategy working? Is the economy turning over? If that happens in conjunction with price increases that people are experiencing, then that probably creates a much bigger problem.
Yeah. Yeah. It'll be fascinating to watch as an observer. Kind of wish I wasn't part of this one.
Right. I mean, I think uh, we're all participants in this.
Right. There's no bystanders here. I also wanted to ask you, I saw the announcement, and you've mentioned your basket view product. Can you just
Mhm.
explain what that is?
Yeah, so it's a product that is a blend of physical receipts, convenience store purchases, direct account connectors for something like Walmart.com, and also email receipt. Basically, getting a whole picture of what customers are purchasing. And right now, what we're really promoting is this product that focuses on the consumer packaged goods space, but it can really touch anywhere where someone can take a picture of their receipt. So it could be at a department store, it could be at a sporting goods store. But the piece that's here right now is on CPG, and that's why we're hyper focused on the pricing piece. Those sorts of prices, I imagine, will impact the narrative a lot more than prices of apparel. But we're really focused on this piece here.
Do you have a sense of what other sectors you'll be layering in down the road beyond CPG?
Yeah, I mean, there's a ton. We're looking at all high interest areas like apparel, electronics, things like that. But certainly more to come. We'll keep everyone posted on that. But a lot of visibility you can get into areas of the consumer economy that aren't necessarily well covered by current consumer data sets.
Well, that'll be interesting. Certainly pay attention to it. So let's talk brands. Who's winning, who's losing?
Yeah. So, as I mentioned, there are certain areas of the economy, certain demographic groups that have, performed better than others. So, we're basically taking a look at which brands have increased share in those winning groups as an indicator on who potentially could do well. So, as I mentioned earlier, high income earners, even though they've started to pull back, are still holding up better in terms of their spending patterns on apparel, accessories, and footwear. But certain companies that have done well within their category and have increased share in their category among that group, names like Hollister, in multi-brand luxury, My Teresa and Farfetch, secondhand stores, the resale space that we mentioned, Depop and Goodwill. And then, we also were talking earlier about, reliable brands, potentially doing well. Quince is a brand we've highlighted several times. This is like a luxury basics company. They've grown a lot. They've been on our winners list, and they're gaining share among high-income consumers. And then, similarly in that younger age group, looking at fast fashion, Shein is gaining share at the expense of H&M and Zara. And then even looking at high-end luxury, Cartier and Hermes have done well. And, we think maybe that's due to some of their digital marketing campaigns that attract influencers and things like that. So I think that does speak to the fact that even in a tough environment, you get really creative and kind of go to where the customer is. Younger consumers depend on influencers. You can have some bright spots. As I said, if there's a huge downturn, it's going to be hard to have, absolute gains, but at least you can hold up a little bit better.
Yeah, you can find the pockets. Having to do with nothing we've discussed so far, do you keep any data on how consumers are responding to ideas like sustainability and products that kind of lean on sustainability?
So we can make conclusions based on their spending behavior. And we do think, and we actually put out a resale report a few months ago. The fact that resale continues to gain such a big portion of spend relative to the overall apparel, accessories, and footwear space is not just because of pricing. It's also because of sustainability. So I think that will be one indicator to see how much that effort is gaining traction. It's a little complex because the pricing element is important. But we did find that even within resale, the ones that were more focused on sustainability were performing even better than the overall category. So I think watching that space is an indication of how that trend is evolving.
That theme, sustainability, just kind of popped itself into our world about 6 months ago, and so we're trying to do a decent to good job of tracking it. And so thank you for that.
Yeah, absolutely.
Well, Michael, it's been a pleasure. I really appreciate this. I'm glad we fought through the scheduling wars and finally made it. And thank you.
Thank you very much for having me. I really enjoyed our conversation.